This is a question that comes from William Lewis. He said, please, did I understand correctly, Mr. Buffett, to say that Berkshire Hathaway sold its interests in 4 different airlines? And if so, can you name them? Can the names of those airlines be identified?
Yeah, I wouldn't normally talk about it, but I think it requires an explanation, and it requires an explanation that means we were not disappointed at all in the businesses that they were being run and the management, but we did come to a different opinion on it. And they're the 4 largest U.S. airlines. It's American Airlines and Delta Airlines and Southwest Airlines and United Continental. And I think collectively they probably are at least 80% of the revenue passenger miles in the that is flown in the United States, and they have significant international flying too, excluding Southwest. So we like those airlines. But we don't. I like the world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself in a reasonably prompt way. I don't know whether the Americans have now changed their habits or will change their habits because of an extended period, if it happens that we're semi-shut down in the economy. I don't know whether the trends toward what people have been doing by phone. I mean, it's been 7 weeks since I've had a haircut. It's been 7 weeks more than 7 weeks since I put on a tie or anything. I've been just a question of which sweatsuit I wear. So who knows how we come out of this, but I think that there's certain industries, and unfortunately I think that the airline industry, among others, that are really hurt by a forced, in fact, shut down by events that are far beyond their control.
But Warren, just to clarify on his question, he asked, did you sell your whole stake in all 4 of those
the
companies?
answer is yes. Yeah, when we sell something, we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or that's just not the way we approach it, any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean, if we like a business, we're going to buy as much of it as we can and keep it as long as we can.
Thank you. The next question comes from Robert Thomas from Toronto, Canada, and he says, Warren, why are you recommending listeners to buy now, yet you're not comfortable buying now, as evidenced by your huge cash position?
Well, as I explained, the position isn't that huge when I look at worst-case possibilities. I would say that there are things that I think are quite improbable, and I hope they don't happen, but that doesn't mean they won't happen. I mean, for example, in our insurance business, we could have the world's or the country's #1 hurricane that it's ever had, but that doesn't preclude the fact we could have the biggest earthquake a month later. So we don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum. I mean, 2008 and 2009, you didn't see all the problems the first day when what really kicked it off was when the Freddie and Fannie, the GSEs, went into conservatorship in early September. And then when money market funds broke the buck, I mean, there are things that trip other things, and we take a very much a worst case scenario into mind that probably is a considerably worse case than most people do. So I don't look at it as huge, and I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period, and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it, you don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others.
That gets kind of to another question that came in from Mark McNicholas in Chicago, Illinois. He says Berkshire itself has a Fort Knox-like balance sheet, but some of its operating companies may be tight on cash during the pandemic. Would Berkshire consider sending cash to its operating companies to, 1, ensure that they can get through the pandemic, and 2, allow them to increase market share while their competitors struggle?
Well, we've sent money to a few, and we're in a position to do that. We're not going to send money indefinitely to anything where it looks like their future has just changed dramatically from what it was a year or so ago, or even 6 months ago. We made that decision in terms of the airline business. We took money out of the business, basically, even at a substantial loss. And we will not fund a company that where we think that it's going to chew up money in the future. We started out with a company like that in our textile business at Berkshire Hathaway in 1965, and we went for 20 years trying to think we could solve something that wasn't that solvable. So we are not in the business of subsidizing any companies with shareholders' money if people want to do that with their own money, but we're not going to do it on their behalf. But we have advanced money. We're perfectly ready to advance money. Gaining market share and all that, that may happen, but the companies that need money probably, market share is not their number one problem, I'll put it that way.
This next question comes from Drew Johnson, who says that he's a longtime shareholder who's attended a couple of meetings. He says in an interview on April 17th, Charlie mentioned that some small businesses owned by Berkshire would not reopen after the pandemic eases. Can you elaborate on which businesses might be impacted?
Well, even we have businesses within businesses. At Marmon, don't we have 97 different businesses, for example?
Exactly, yep.
Yeah, and there are some that weren't doing that well before. And I'm not talking about Marmon specifically, but they got a couple of them, and there's a couple of, and it may be that in effect what's happened in the last couple of months has accelerated the decline of those businesses, or their customers are developing different habits. I mean, people are developing different habits in retail. There's no question about that. Now, that doesn't mean we haven't got a bunch of good retail businesses, but there are businesses that were having problems before, and that have even greater problems now. We don't own our newspapers anymore, but we're financing the enterprise, which does have them. We've actually increased our investment in the newspaper business by selling the papers to Lee and then refinancing their debt. And the newspaper business was having plenty of problems with both circulation and advertising before the virus came along, but advertising declines every place have accelerated fairly dramatically. You're seeing a lot of change. If you own a shopping center, you've got a bunch of tenants that don't want to pay you right now. We don't, and the supply and demand for retail space may changed fairly significantly. The supply and demand for office space may change significantly. A lot of people have learned that they can work at home, or that there's other methods of conducting their business than they might have thought from what they were doing a couple of years ago. And when change happens in the world, you adjust to it.
That the day of passive investing is over. The historical safety of investing in an index fund long-term is gone. Would you please provide your thoughts on this topic, particularly in regards to an investment time span of 10 years?
Well, I can tell you I haven't changed my will, and it directs that my widow would have 90% of the funds in index funds, and I think it's better advice than people are generally getting from people that are getting paid a lot to give other advice. You don't make a lot of money advising an S&P 500 index fund. I mean, how you can say the day of index funds is over? I mean, if you say the day of investing in America is over, I would disagree quite violently. And then is there something special about index funds being a terrible way to invest? I just don't think it's very hard to have evidence of that. I mean, if the index funds reflect the market, and one side has high fees that think they can pick out stocks, and the other side has low fees, I know which side's going to win over time. And you have to recognize that it's in a great many people's interest to convince you that they can do something that they may well even believe they can. And a certain percentage of them will do it from luck, and a few people will do it from skill, and that's what makes it so enticing that you can find the Jim Simons or somebody that's going to produce extraordinary return. And Jim and his group have done it by brain power, but it's very unusual, and incidentally, they are going to charge you a lot of money, and they're going to actually maybe close up their fund if they do it, because they can't do it with really huge amounts of money compared to how the record's been established in the past. So,
I got a number of variations on this next question, some more polite than others. This one's right about down the middle. But this is from Mark Blakely, who writes in from Tulsa, Oklahoma, and he says, like many, I'm a proud Berkshire Hathaway shareholder. However, in comparing the performance of Berkshire with the S&P 500 over the last 5, 10, or 15 years, I've been disappointed in Berkshire's underperformance. Even year to date, Berkshire is trailing the S&P 500 by 8%. To what would you attribute Berkshire's underperformance? Well, I can't imagine ever selling my Berkshire stock. At some point, money is money.
Well, I agree with everything that I forget his name, but said. I mean, the truth is that I recommend the S&P 500 to people, and I happen to believe that Berkshire is about as sound as any single investment can be in terms of earning reasonable returns over time. But I would not want to bet my life on whether we beat the S&P 500 over the next 10 years. I think I obviously think there's a reasonable chance of doing it.
Right, here's a question from Lou Bogart in Boca Raton, Florida. He says, I'm a longtime shareholder with a concern as I head into retirement. I understand the theory that splitting shares does nothing for the value of shares. However, with the extremely high price on A shares, when I wish to draw down some money on my portfolio in retirement, I'm facing a large tax hit. Say the average price has been about $300,000 this year, and I'm sitting on a $200,000 capital gains liability for each share. If I need $60,000 in additional cash during my retirement, I need to sell a full share and get hit with $200,000 tax liability. If you would split the stock 10 for 1, I could sell two $30,000 shares and keep my tax liability at a more manageable $40,000. I could also maintain more of my investment in Berkshire. He said, have you thought about this? In retrospect, I should have bought B shares, but didn't think of that at the time.
You can convert A to B shares, which is exactly what takes place when I give away the money in July to the 5 foundations. I actually convert it immediately before the gift. I mean, and so they get B shares, and the truth is the B shares are very useful to people that want to either give away a small portion of what they have or spend it or whatever it may be. So you can convert the A to B shares, which is exactly what I've been doing now for 14 years as I give it away, and solve that problem. And we split the B shares, as I remember it, at one point, just to make it even more manageable so that people could deal with smaller denominations.
Gentlemen, I'll make this the last question. It comes from Phil King. He says, many people in the press and politics are questioning the validity of capitalism. What can you say to them that might prompt them to take a look at capitalism more favorably?
Well, the market system works wonders, and it's also brutal if left entirely to itself. And we wouldn't be the country we are if the market system hadn't been allowed to function. And to some extent, you can say that other countries around the world that have improved their way of life dramatically, to some extent, have copied us. So the market system is marvelous in many respects, but it needs government.